Good afternoon. It is Wednesday, January 17th, 4:15 p.m. Today, people, was just another example of the in-your-face criminal activity that goes on in these so-called quote-unquote markets. Boom! There it is again. They hit gold again. Look at that. Look at that chart. Now, first of all, gold had been under pressure throughout the day, and then it reversed, okay? As can be seen here in this picture, it was trying to take out that 1340 level. It went up to 1338. They brought it back down, and then it reversed. And as soon as it hit that 1340 level, at this point, it was up $1.80. First time it was up all day, and then boom, they hit it. Now, if this isn't in your face fraud and manipulation, I don't know what is, okay? Because if this happened in any other asset, right, they'd be screaming bloody murder on CNBC, right? Look at the price action. That's not natural, okay? It's just not natural. It's clear, come hell or high water, they're going to defend this 1340 level, okay? And I've been saying for years, okay, that 1340 is the key. And I don't know anybody else out there, to be honest, that has used 1340. They're throwing out other numbers, right? 1350, 1360, right? Others below and so on. And only just recently. For years, I've been saying 1340 is the key. And if this doesn't prove it today, I don't know what will, quite frankly. All right. I said the other day, there were people, 1340 is nothing. Oh, we're going to 14, right? They wanted to pop the champagne. I said no. I said, this is the battle right here. I called it the hornet's nest, right? That battle, right? In Shiloh, right? This is worse. This was like Pickett's charge today because gold had absolutely no chance. And how could it have a chance, okay, when you could just infinitely short in the paper markets? Once again, I'm issuing a clarion call. This has to stop, okay? And it will end, okay? It will end. And when it ends, okay, it's Katie bar the door, okay? Because unholy hell is going to be released on these markets, okay? Look at what they have to go through to defend this 1340 level. All right? It's like the Big Short, right? He goes, he says, I set the price, pay up, right? And they're going crazy, right? They're barraging him with every curse and screaming at him. He said, I told you this was a dark pool and I set the price, right? And then he says, it's all fueled by stupidity. And this is greed. This is criminality. Outright greed, okay, fraud, but it is stupid because they're stupid to think that they're going to get away with this. It's going to come to an end eventually. I don't know when, okay, but it will. And when it comes to the end, it's Katie bar the door, all right, with this. Now, is this the start of perhaps a long pullback in gold? Yes, very well could be, all right. We have to see. This could be the start of now a correction that could last quite a while, all right, as it consolidates. But they shut the door on it today, all right? They said it in your face. We're not letting you take out 1340. So, you know, that's how it is, people. I want to switch gears because this Dow Jones Industrial Average, right? And I've been looking at it, all right? And I've been coming up with things about the complacency, the margin calls, right? You know, the margin level that's out there, the cash accounts, right? Everybody is all in. They're all in. Nothing can rattle these markets. Yesterday, it went down. There was this huge swing, right? My friend texted me, is this the start of the end? I said no. I said these markets can go longer and higher than most people expect. It's a bubble, but they can still go on. All right? I want to look at another indicator today. The RSI indicator, the Relative Strength Index, which basically, it's a momentum indicator for starters. All right? And it measures the velocity, okay, of the rate of change, how a stock is going up or down, okay, and the magnitude, the size of the move. So how much is it going up and at what rate, okay? So, and it's a classic indicator. It's a classic indicator. It's used by traders, all right? It might not be used alone. It might be used in conjunction with other indicators, but it's a classic indicator, right? And there's this formula. But basically, all right, if the number is above 70, it's overbought. And if the number is below 30, it's oversold, all right? And let's call 50 par, right? And you can do it for all sorts of periods of time, right? And classically 14 days, right? But the shorter the time period that you're measuring, the more sensitive it would be, right? The longer the time period that you're measuring, right, the less sensitive it would be, right? So I looked at the Dow Jones Industrial Average, right? The RSI, all right? And I printed them all out. Let's start with IBM, right? Here's IBM. See if you can see that, people. Let me find it. IBM, right? Now, this is going back to the new year, because this new year is off like gangbusters here, all right? This is IBM. So we have the date, the price, the change, the average, the gain, the loss, the RSI. I want to focus on just the RSI. I mean, there's this other thing called the smooth RSI, which could be very close at times, maybe it's marginally different. But anyway, so this is IBM, okay? Over 70 signals, it's overbought, all right? So, look at this. It was 45, right? Just 45 on January 2nd, right? 55, 74, 76, 84, 84, 85, 87, 88, 88.72. It's been over 80 6 days in a row. It's been overbought. That's IBM, right? This is 3M. 3M. Let me show you 3M, okay? Right? Every stock on the Dow I did. Here's 3M. Started out 35, 45, 47, 60, 57, 61, 71, 88, 88.89. 3M. Okay? And I'm not saying they're all overbought. This is American Express. Okay? American Express. All right? It was overbought on January 5th. It came back in at 60. It's still over the neutral 50 though. Right? It's right in between 50 and 70. Right? Then you got Apple. Apple, they just announced they're going to bring home like $250 billion. Where's all that money going to go? Where's it all going to go? Right? Apple. Apple is actually not overbought. 53. Okay? All right. Let's look at some others. This is Boeing. This is Boeing, right? Boeing. Look at this thing. 80, 73, 60, 78, 79, 83, 84, 86, 94, 92.36. All right? And this doesn't even include today with the 300-point move. Right? Doesn't even include today. 92.36. Chevron. Overbought. 83, 90, 86, 88, 88, 83, 84, and they're consistently overbought, right? 74.73 overbought. Was in the 80s. This is Cisco. Cisco, overbought, right? It was 80 last, right before last. 73 in the 70s, overbought. Caterpillar, this stock, I don't get Caterpillar. This stock is bewildering to me. Okay, Caterpillar. 81, 82, 79, 92, 93, 92, 89, 90, 90, 84. Overbought. I won't go through the whole list. Okay, we got Coke, 66, last. Disney, 57. Okay. DuPont, 67. DuPont for a long time was overbought, right? Now this does not include today. DuPont for a long time was overbought. It's only marginally now. It's still 67. Remember, it's on the high side. 50 is, let's call, neutral. This is 67, right? Exxon, overbought, okay? Exxon, 83, 82, 80. It's all in the lower 80s, high 70s. Came in at 70.94. And look, there's that other thing. I'm not going to get into that, but it's higher too, the smooth RSI, right? So these things are all overbought. Home Depot, overbought. Here's the only stock on the Dow that is actually oversold, and that's Intel, okay? Because they had a problem with their chip, right? They announced, right? Intel. Look at Intel. Oversold, 26. This might be the only thing, if you're a value player, right? This might be the only stock you might want to think about. Not for nothing, right? Unbelievable. Johnson & Johnson, oversold, 84.16. JP Morgan, oversold, 77.02. McDonald's, not oversold, but again, high. Merck, 88.22, oversold. Microsoft, I'm sorry, all these were overbought. Excuse me, they were all overbought. Okay, Microsoft overbought. United Technologies. Ooh, this is look at this thing. This thing. Where's United Technologies? 90s. Wow. Came back in a little. Still overbought, right? Walmart, not overbought, but high side. All right, so then what I did, here's a breakdown of all of them. Here's a breakdown in one chart, right? Now, if it's red, it's overbought. If it's yellow, it's high side of neutral, right? If it's blue, it's low side of neutral, meaning under 50. And if it's green, it's oversold. There's only one green. That's that Intel. All right? So here they all are. 3M, overbought. American Express, high. Apple, high. Boeing, Caterpillar, Chevron, Cisco, high. Right? Coca-Cola, Disney, DuPont. I'm sorry, Boeing, Caterpillar, Chevron, and Cisco are overbought, red. Then the other three are high. Then you got Exxon is overbought. GE is high side, right? Then you finally got your little pale blue there, 48. And it's margin, it's only 48.93. Okay, that's Goldman, the dark side. Okay, they're slightly less than neutral. Then you got Home Depot and IBM overbought. You got Intel oversold. Johnson & Johnson overbought. JP Morgan overbought. McDonald's high. Merck overbought. Microsoft overbought. So you could see for yourself, people. Let me show you all the stocks here, right? And what they are, right? Here, GE, they had a big problem. right? There's 61. They were overbought up until not that long ago. So now what I did here, down at the bottom, there's 30 stocks on the Dow. So I have 15 are overbought, 11 are over neutral, 3 are under neutral, and 1 is oversold, Intel. So 26 out of 30 stocks are over neutral and 4 are under neutral, and not by much with some of them. And again, 15 are overbought. All right, this is a classical indicator. As far as I am, this is just another notch on the belt. Does it matter though? I don't know if it matters, because this thing has a life of its own. It has a lot, and you know what? I'll recommend another book now that I think about it. I'll recommend Frankenstein, okay? Because this Fed has created a monster, and it's got a life of its own. So I don't know when it's going to end. I want to switch gears, if we can. I'm looking at Bitcoin, and Litecoin, and Ethereum, and Ripple, and these cryptocurrencies are getting crushed. Okay, now somebody's going to have to step in, I suppose, and pump up this market. Maybe the Winklevoss twins are going to have to put out a little more money to keep this shell game going, to get the next suckers in. All right. So what do you do if you bought Bitcoin at 20? What do you do? Huh? Is this it? Is this buy the dip right now? I don't know. All right. But I know one thing. Okay. There's no more free markets, even here, okay? Because once Wall Street gets their hands on it, that's it. So there's going to have to be a lot of pumping, okay? There's going to have to be a lot of that, all right? It's like from The Big Short again, right? Mark Baum, he goes to Vegas, right? He wants to see about these real estate investors, and he sits down with that guy, right? And he's doing these derivatives, right? These CDOs, a CDO of a CDO, right? It's a bet on a bet on a bet, right? And he realizes the whole world economy can come crashing down, right? And he's got to go. He says, I'm going to go get moral redemption at the crap table. Well, that's how I feel. I got to go to the racetrack and get some moral redemption, because these are not markets here anymore. A case for cryptos. In practice, Bitcoin and other digital currencies face significant practical hurdles to their adoption as outside forms of money. And many of their possible benefits come with significant drawbacks, several of which were highlighted by our colleagues in an earlier report. First, some features of cryptocurrencies that might, now this is Goldman, some features of cryptocurrencies that might make them competitive with alternative stores of value are also features that are likely to attract government scrutiny. In particular, the anonymity of many cryptocurrencies makes them a useful medium of exchange for criminal activities, including tax avoidance and the circumvention of capital controls. As such, it would be surprising if continued growth in their popularity did not eventually attract greater regulation and law enforcement action by government. Second, the fact that cryptocurrencies function without central banks may make them valuable as inflation hedges or stores of value, but also makes them vulnerable to demand-driven fluctuations in price. Demand-driven fluctuations in price. How could anybody make a claim that you could use these cryptocurrencies as money after what we've witnessed in just the last 2 days and the volatility? There's some people, they're delusional. They think that over time it's all going to start to get very stable. No, it's not. 80% of all Bitcoins have already been mined. Such volatility makes them poorly suited as a substitute for money generally, which is why most nations eventually abandoned the gold standard in favor of fiat currencies that can more easily stabilize the purchasing power of money by making the necessary supply adjustments in response to changes in money demand. That was the sentence that when I read it, I really got hot under the collar. Okay, I'm going to read that again because it's such a blatant lie. Such volatility makes them poorly suited as a substitute for money generation. I agree with that clause. Yeah, as far as cryptos goes. These cryptos are so volatile, they can never be money. But even if they weren't, they could never be money. And I'll get into that, hopefully. So I believe with the first part of this sentence. But then he says, which is why most nations eventually abandoned the gold standard. No, they didn't abandon the gold standard because gold was too volatile. Gold is like Polaris, okay? Everything else is changing around it, not gold, okay? They abandoned the gold standard because they want to be able to print, and go to war. And that's what it takes. It's not gold that's changing. It's everything else. Which is why most nations eventually abandon the gold standard in favor of fiat currencies that can more easily stabilize the purchasing power of money by making the necessary supply adjustment. There you go again. I said it the other day, the usual suspect. They want to control the supply of money. Why isn't money a free market? By making the necessary supply adjustments in response to changes in money demand. The recent fluctuations in Bitcoin and its relatives suggest that they are much too volatile to serve as money. Volatility would likely need to come down dramatically, either naturally or through the widespread adoption of cryptocurrencies designed to better stabilize purchasing power via supply adjustments before we see broader adoption. Okay? So, I'm running out of time, all right? I'll continue, people, because I think this is important. But I want to go back to this book. What has government done to our money? I just want to read something real quick, okay? I'm not going to read the whole thing, okay? Money in a free society, the value of exchange. How did money begin? Clearly, Robinson Crusoe had no need for money. He could not have eaten gold coins. Neither would Crusoe and Friday, perhaps exchanging fish for lumber, need to bother about money. But when society expands beyond a few families, the stage is already set for the emergence of money. Okay? And it's all about exchange at the end of the day. To explain the role of money, we must go even further back and ask, why do men exchange at all? Exchange is the prime basis of our economic life. Without exchanges, there would be no real economy and practically no society. Okay? Clearly, a voluntary exchange occurs because both parties expect to benefit. An exchange is an agreement between A and B to transfer the goods or services of one man for the goods and services of the other. Obviously, both benefit because each values what he receives in exchange more than what he gives up. When Crusoe, say, exchanges some fish for lumber, he values the lumber he buys more than the fish he sells. While Friday, on the contrary, values the fish more than the lumber. Okay? From Aristotle to Marx, men have mistakenly believed that an exchange records some sort of equality of value. If one barrel of fish is exchanged for 10 logs, there is some sort of underlying equality between them. Actually, the exchange was made only because each party valued the two products in different order. Why should exchange be so universal among mankind? Fundamentally, because of the great variety in nature. Now, he goes on to say the exchanges. We started with barter. Okay? Yet direct exchange of useful goods and services would barely suffice to keep an economy going above the primitive level. Such direct exchange or barter is hardly better than pure self-sufficiency. Okay? We needed something better than barter. So then the next thing is indirect exchange. But when man discovered in the process of trial and error the route that permits a greatly expanding economy, indirect exchange. Under indirect exchange, you sell your product not for a good which you need directly, but for another good which you then in turn sell for the good you want. At first glance, this seems like a clumsy and roundabout operation, but it is actually the marvelous instrument that permits civilization to develop. Okay? Consider the case of A, the farmer who wants to buy the shoes made by B. Since B doesn't want his eggs, he finds what B does want, let's say butter. And A then exchanges his eggs for C's butter and sells the butter to B for shoes. Okay, there's indirect exchange. All right, now I'm not going to read the whole thing. All right, but let's cut to this now. And we've talked about this. Historically, many different goods have been used as media of this exchange. Tobacco in colonial Virginia, sugar in the West Indies, salt in Abyssinia, cattle in ancient Greece, nails in Scotland, copper in ancient Egypt, and grain, beads, tea, cowrie shells, and fish hooks. Through the centuries, two commodities through the centuries, gold and silver, have emerged as money in the free competition of the market and have displaced the other commodities. Both are uniquely marketable, are in great demand as ornaments, and excel in the other necessary qualities. Okay? In recent times, silver, being relatively more abundant than gold, has been found more useful for smaller exchanges, while gold is more useful for larger transactions. All right? He goes on to say, and let me read this. This process, bear with me, people, and this is important, because so many people get this wrong. Even these free market guys, they stop short when it comes to money. This process, the cumulative development of a medium of exchange on the free market, is the only way money can become established. Money cannot originate in any other way, neither by everyone suddenly deciding to create money out of useless material, nor by government calling bits of paper money. And this is an old book. But it's as relevant today, and then more so. For embedded in the demand for money is the knowledge of the money prices of the immediate past. In contrast to directly used consumers or producers' goods, money must have pre-existing prices on which to ground the demand. But the only way this can happen is by beginning with a useful commodity under barter, and then adding demand for a medium of exchange to the previous demand for direct use. Thus, government is powerless to create money for the economy. It can only be developed by the process of the free market. A most important truth about money now emerges from our discussion. Money is a commodity, okay? It's not zeros and ones on a computer screen, okay? It's not paper in the sense of fiat, by government, dictate. It's a commodity. Money is a commodity. Learning this simple lesson, and a lot of people unfortunately didn't learn it, right? Because now they're burned. Now they're sitting on 17, 18, 19, 20 grand bitcoins, okay? And at the end of the day, they're going to find out the hard way they were scammed, okay? Because they didn't know the fundamental truth that money is a commodity based all the way back in direct exchange with barter. Learning this simple lesson is one of the world's most important tasks. So have people talked about money as something much more or less than this. Money is not an abstract unit of account, divorceable from a concrete good. It is not a useless token. That's an interesting word. I had a little chuckle to myself when he used that word token, way before Bitcoin ever came out. You got a lot of tokens on the internet right now, flying around in the Ethernet, right? Useless. Money is not an abstract unit of account divorceable from a concrete good. It is not a useless token only good for exchanging. It is not a claim on society. It is not a guarantee of a fixed price level. It is simply a commodity. It differs from other commodities. It has an existing stock. It faces demands by people to buy and hold it. Like all commodities, its price in terms of other goods is determined by the interaction of its total supply or stock and the total demand by people to buy and hold it. People buy money by selling their goods and services for it, just as they sell money when they buy goods and services. So he goes on to say a lot. Again, I recommend this book highly. But I want to get to the final paragraph. This is getting very long. Now that we have seen how money emerged and what it does, we may ask, how is the money commodity used? Specifically, what is the stock or supply of money in society, and how is it exchanged? In the first place, and this is important, and I think this sums it all up, and this is what the Bitcoin people and the crypto crazies got wrong. In the first place, most tangible physical goods are traded in terms of weight. Weight. W-E-I-G-H-T. They're traded in terms of weight. Weight is the distinctive unit of a tangible commodity. And so trading takes place in terms of units like tons, pounds, ounces, grains, grams, etc. Gold is no exception. Gold, like other commodities, will be traded in units of weight. Okay? This is gold, an ounce of gold. When it hits the table, it makes a sound because it's got weight, okay? That's what makes it a useful commodity, and that's what made it and always will make it the best form of money. Not because I say so, because it is what it is, okay? So all these people that want to go around and think that they can create zeros and ones and turn them into money, okay? They're deluded. I don't care what the price is, okay? Chase your tail all you want. But at the end of the day, this is money. That's it, people. I said it's a battle, okay? It's just heating up. I don't know when this is going to end or how it's going to end, but it's going to be bloody. I can guarantee that. Ciao.